Good evening, all. This is Trader72. I'm back again. I've just done a YouTube show for the analysis on Adobe, which should drop tonight before the results. And I'm back again now for the evening diary. Please subscribe and like. And I hope you're well. I did not do a morning show. I didn't have a chance this morning. It was a busy all day on my other job, because we all have other jobs, someone on the way to do. If I could just be a full-time trader, I would, but I can't. And missed out on that one. So I thought I'd just do it one day today. And welcome back to my channel. I'm back. It's been a bit of a day of it. Last night was even worse. I don't know if you're Chelsea fans, but I am a big Chelsea fan. 32 years I've supported Chelsea since 1984. When I first arrived in this country, I'm half French, half English, and I came over in 84, and my first team was Chelsea. I've been a long-term suffering and also great times. But recently, it's tested my will. Last night's results, I'm sure some of you may know if you like football. Sorry if I bore you. I won't go on too much about it. But last night's results for Chelsea was abominable. And why? And I think if anybody wants to answer that question for me, why do we play from the back? What is the obsession with playing from the back, including a goalkeeper? A goalkeeper there's a reason why they're goalkeepers. Is they stop the ball to go back to the net. It's a simple sport. And now they've been used as sweepers, midfielders, defenders. Jorgensen, who's clearly not, that great in the first place, bless him, was asked to pass the ball around. He got away with it a couple of times and then got caught out twice. And the same thing happened with Spurs the night before. I do not understand why managers, and I don't think we should blame the players, we should blame the manager. But anyway, this is not a Chelsea channel. This is a trading channel. But, sometimes we need to lighten up a little bit and see what else is out there in life. There are other stuff, other passions, I'm sure. But somebody needs to explain to me in the comments below, if you want, why we play from the back. That is the question of the day for me at the moment. It has been bothering me all day. But anyway, without further ado, let's move on from that grim defeat last night in the Champions League to PSG, which ironically used to be my first team when I was in France, but obviously Chelsea's in my heart now over those years. But let's see what we can do next, because this transfer policy of buying young players and his obsession that Liam Rossini's got from playing from the back, I don't get it. Maybe that's my age. Maybe I'm sure my age. Anyway, let's move on from that. We've got bigger issues at hand. And looking at the headline on the screen here, the oil price is nearing $100. Now, some of you may know from last night that I bought into crude oil, which I don't normally tend to buy into commodities, but I thought it was an opportunity to buy, thinking that the war may well come to an end fairly shortly. And I was, wrong, because clearly there's been issues since then, and it has reversed on me. Now, I'm not losing a huge amount. I think I'm about 150 quid down at the moment. It's not the end of the world, and I didn't thankfully buy too much, which is, again, your entry point. Buying a small amount is always key. So, it's, again, like I said, from this channel, this is all about transparency. I do not BS anybody. What you see is what you get with me. And like I said to you many of times, I've been around for about 11 years doing this on and off as a retail investor. So if I can hope to help a few people with my information, all the better. If not, well, it's just me and talking to myself and enjoying a recap of the day to myself. So this is what I've been saying all along. But I am here to help more junior retail investors, or people that have already been in it for a bit longer, who may just need a little bit of something else to hear than when you trade on your own all day long. It's sometimes nice to hear what other people's opinion may be right or wrongly, obviously. But you can tell me that in the comments below again if I am not hitting the spot, or getting it wrong, or getting it right. It's the other way. So, let's go. Oil prices hit $100. That is the main port of call today. Couple of things that have done this in the first place, obviously, is, first of all, the new supreme leader, the young son of the last Khomeini, has warned that critical waterways for global shipping will remain closed as the US-Israel continue an assault. So that's obviously bottlenecked completely and utterly the ports the Strait, even of Hormuz. So I don't know actually if it's Hormuz or Hormuz. Somebody can probably tell me that off for that, but that is what is going on. Now, there has been, that's one thing obviously from the new leader, which was meant to be, I think, potentially dead, but he is alive. And he's basically slain from the outset the US and Israeli strikes, blah, blah, blah. Added that Iran would not shy away from avenging blood and martyrs, da, 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 da. So that is the first thing. So obviously, clearly, about 12 o'clock, 11 o'clock last night, I was just checking in actually on my specifically on that, because I don't really check on the stocks once I buy them too much, or you go completely mad with the complete fluctuations. But crude oil, you do need to keep an eye on it, and it was going up from 92 to about 96, 97 last night as I went to bed, and clearly this was an issue. Now, a few tankers have been hit as well, I believe, off the coast of Iraq. So that doesn't help neither situation. I think there is a reason why the Americans are not going in to protect the boats. It's a very narrow lane for a start, and also very dangerous. So I think the US Navy for now are basically taking a slight backseat to see what will happen. So Brent oil global market obviously went up about 10% to $100 a barrel. Obviously, the IEA announced the release of record amount of oil reserve yesterday, 400 million barrels. Didn't really initially did the trick, and now obviously clearly it hasn't. And the price has gone back up. So it's, like I said, it's involving, as it says there, evolving situation at the moment. Heightened worries over the Middle East oil supply. Obviously, 20% of supply goes through the Strait of Hormuz, so it is quite a substantial amount. Media reported 2 oil tanks were attacked near the Iraq and Kuwait coast. Footage on the event shared online, blah, blah, blah. So that is what it is at the moment. So that does keep, there's obviously lots of different situations there with different Middle Eastern countries being attacked as well, and still a few drone missiles going out and about into different countries. So even so, Trump did say that this was well ahead of time, and there's no reason not to believe him in that respect. But the war is not quite over, it seems, and I think there is still an ongoing situation. But I think the Strait of Hormuz is the big contention here, and hence why the oil prices have gone back up. So again, the IEA crude oil straight have slowed down the trickle of around 20 million barrels per day before the outbreak of the war. So yes, so it's gone from 20 million barrels a day to 10 million barrels a day going through the Strait. So it's halved by 50%. So, and also apparently there's a bottleneck of tankers waiting to get out. So it's clearly not a great situation. I don't think it's catastrophic yet, but it obviously could be an issue going forward. So that's it. I think globally oil supplies are now tipped to slide to 8 million barrels per day in March, with curtailment from the Middle East only partly offset by higher output from Russia, Kazakhstan, obviously, that are also producers. The comment coming from the IEA will release $400 million. Yeah, we know all this already. So what does it mean for the market? Like, the main drivers of the day, we've already gone that. Now, in terms of actual sectors, obviously everything has been affected today. Airlines, travel, industrials, energy, as highlighted there. So that obviously will affect all of these sectors above. Obviously, energy stocks will go up because obviously that's good for them, but industrials, travel and airline, not great. Inflation and rate cut expectations. Some banks have already pushed for an expectation. Now, this is obviously now moving on to the CPI news of yesterday. I think there was also some more numbers that came out today which were redefined, so we can go through that in a minute. But obviously now the rate cut, which was meant to be in July, might be pushed back to September to see where things will fall, presumably, and also with the conflict going on at the moment. There is also another issue that's been going on, which is bubbling up in the background, which is probably worth just very briefly mentioning. The financial sector, private credit market stress, some funds restrict withdrawal. There's been a little bit of there's been a hush in the background. Now, what does it mean? Just to give you a quick idea. So lots of companies like hedge funds, private equity funds, credit funds, lend money to banks, to companies. So the banks obviously are traditional lenders, but the private credit funds are the ones that are alternative if you can't get credit through the banks. And they lend through obviously bonds, which helps company acquire the companies and so forth. Now, there's been a struggle to repay those loans, everybody. So that's a little bit of a problem. It has got the sniffs of slightly of 2008 when there was a crash, obviously, but this was a much bigger situation. It doesn't seem to be as big there, but that could be a problem. And obviously, some banks like JP Morgan have been a little bit affected by this. So obviously, the reason why is obviously the high interest rates, slowing economy, and weaker corporate profit recently. So a lot of the numbers that have come out from some companies have been as great as they should have been. So the value of these loans is falling, unfortunately. So what does it actually mean? So obviously, to give you a quick example here, and I'm giving a very brief, simple example. If the loans look too risky, reduce their value. So if somebody lends for $100 million, and now the market thinks it's risky, and it's worth only $80 million based on the money you've lent. That means that the bank or the hedge funds or the private credit companies have to do a write-down of £20 million loss. That goes on their books. So that doesn't look too good going forward. So there is a bit of an issue there where obviously you can't, investors that lend that money to these companies to lend to those companies. So there's obviously an investor, if you decide that I want to put money into a company like a hedge fund, that hedge fund then lends money to those companies for loans. And if as an investor I feel that my money is lost, I want my money back. And it's illiquidity, they call it, which means that you can't pull the money back because you can't just pull a loan out of thin air because there will be an agreement between the hedge fund and the company. So therefore, you cannot get your money back, and that does put stress on the stocks, and obviously people start panicking, and anything to do like 2008, are still very scarred by it, I think represents a little bit of a panic in the market. So that would be another slight compounding issue to the financial sector, which is basically pretty much the crude oil going up and inflation being sticky, and on top of it now this little issue of those write-downs, or of these what we call write-downs, exactly. So loans are illiquid, so not easy to sell quickly. That's the other big problem. The funds cannot sell the loans they hold, but the funds cannot sell the loans they hold. Investors put their money into credit funds are trying to take their money out. So again, just to reiterate what I just said. So basically, you can't take your money. As an investor, you can't just ask the hedge fund to give you money back because you're losing money. There's a write-down. So I've just thought I'd explain that. It's not always easy to explain, but it is in a simplistic way the best way to come. So that is another little problem in the background ongoing there at the moment. So at the moment, the worst sectors today are airlines, banks, semiconductors, and consumer stocks. It has affected my S&P Global pretty much, and I'm pretty sure that's why today it's down, and so is Visa. But even so, they are very much removed from the credit crunch of these companies lending money. But obviously, with oil being what it is at the moment, it's compounding for sure. So the volatility. Now, I'm just about to touch on this very quickly. Volatility index is interesting because it does give you an idea of the actual mood swing of the swings of the market as it stands. So volatility index has jumped recently. High intraday swings, more defensive positioning, less risk appetite. So again, volatility index is anything above 15 is quite volatile, and it is currently at 24 to 25, even I think 26 recently. So that is very volatile. It gives you that. It basically tells you there's going to be massive swings in the market. The lower the volatility, the more the market are steady. A bit like the sea, being quiet, calm when there's no storm, and when there's a storm, volatility. It's called the volatility index, called actually the VIX. It's the fear gorge, they call it, apparently. So again, something for you guys to be aware of if you are looking at that. It does actually help you to find out whether to invest at specific times or not. As a value investor, it doesn't really make a difference because you're investing in companies that are obviously in volatile moments and down. But obviously, if you're more of a short-term buyer, then that could be quite handy to be aware of. So, 3 takeaways of the day. Oil is driving everything down. We know that inflation narratives are back, so that's obviously sticking because of the oil, and it certainly is a risk-off tone. So where we are, that's where we are at the moment. Again, just to go back to the VIX, actually, fair enough, I've just misplaced that and put it down there. So VIX is 10, between 10 and 15 is calm. Anything above 15 to 20 is pretty normal levels. And 20 to 25 expect big swings for uncertainty. So that's where we're at the moment. There's massive fears. Always is in the markets. There's never going to be two. There's times where it's quiet, but when there's a conflict, there is at the moment, that will obviously give that impression, obviously, in certain other issues in the background, i.e. inflation not being where it should be at, and the oil being up, and the banking sector having issues with credit, private credit ratings as well, loans going bad. So there's a few issues, and we are always aware of these, so I just thought I'd let you know. And again, it's called the fear gorge. I was actually right there. There you go. I've been around for long enough to know these things a little bit. Yeah, just a summary on the VIX. Always want to, teach the people, not teach, but let you guys aware of certain things that are happening and expressions and potentially, VIX being a useful tool. But there we go. So let's have a quick look now. We can take this down for now and have a quick look. Again, confirmation from my platform in terms of latest news. Oil prices surge. We've gone through all this. Bond yields are up. Obviously, it goes without saying when safe havens. Euro under pressure versus the dollar. We don't really feature as much on the forex side, but always something to keep an eye on. So global shares, as you will see, is currently 1% down on the US 30, which is the equivalent of the S&P 500. It is down 500 points. Now, it's not down massively, but it's down enough. And to compound it, as opposed to the last few days when the Nasdaq was up, they are both in the red, and the Nasdaq is down about 300 points, not a huge amount again. Crude oil, as you will see, is lingering around the 99 to 100 mark. Not good for me in my position. We'll come back to that in a minute. And gold, being the safe haven, ironically, is down 65 points at 127. Pretty much all markets are down in the red at the moment. So it's a grim reaper is definitely out at the moment, let's be honest. Now, let's have a look at my current portfolio, which is definitely in the red today. I can see immediately from the charts, 421, S&P Global is obviously fallen off. It was at 428 on at the opening. Visa was at 310 on the openings, down 307. Big tumble for MasterCard as well at 500, which MasterCard tend to fall harder than Visa, so it's probably why Visa is more of a defensive stock and a safer bet to have at the moment. Uber opened up, but then is, like the rest of the market, down by 2%. There was some Uber news actually, but Microsoft's not really moving at 404, being pretty much stuck there at that mark. United Healthcare did go off on my alarms at the moment at 278, so another good price to buy. If you're going to look at United Healthcare, they're probably a good price that now. Although looking at the momentum gorge there, the Stoich, it looks like it's really struggling to get above that oversold limit. So I think could be looking at maybe a further fall, but a big fall today, 2.41. So that's where we're at the moment. Crude oil, as I said, 99. So a quick look at my portfolio for now. It's all in the red. Happy days, it seems. Visa down 66. S&P Global down 150. Ouch. Probably the lowest it's been in a while. I did buy yesterday at that very price, the second tranche, but I ain't going to buy any more at the moment until I see what's going on. Crude oil, my position in crude short at the moment at $92 a barrel is now at 99, so down 138. And of course, the feature I made earlier on, which you guys will see in a bit when it drops, is Adobe, which at the moment is also struggling to get anywhere near the price of the last week. It's at 270, just under 270 at the moment. And obviously the big night tonight with the results. That will be something I will be certainly checking out. My thoughts are that I'm gonna be not positive. I've got a feeling, I did say in my previous show that's dropping in a bit, that I'm looking forward to seeing it go up, but I have my doubts whether or not we will see. Even with good numbers, there seem to be a tide against Adobe at the moment, and I think anything negative will be glorified massively, which I think is totally unfair in that respect. when a stock is in the doldrums, it is in the doldrums. So we'll see what happens with Adobe tonight. That will be a show we'll do tomorrow morning for you guys once probably actually maybe mid-morning. But anyway, so that's the entire news for the day. It's not been grim. It's been grim indeed. And it certainly has been a red week so far this week. And just when you think that the war is going to be potentially over after Trump mentioning it a few days ago, it seems that that is lingering into potentially a third week, which is a bit worrying if you are in my position of oil. But oil will eventually come down once this is sorted. I don't know how long this will go on for. It really depends on the Americans and the Israelis and what they'll do next. And I think we are in for potentially another down week on the markets. That's my opinion for now, unless tomorrow is a pick me up. So hopefully I'll be back tomorrow. We'll be back tomorrow morning. I'm not sure if I'll do an evening one because I am going to be taking a half day off tomorrow, believe it or not, to play a bit of golf, which is my favourite other pastime. I know, middle-aged man playing golf. Yeah, no difference there. I won't deny that, but I do enjoy it. I've got new clubs and I want to go and play with them. Me and my girlfriend enjoying ourselves, a bit of fresh air. When you work from home all day long, as I do, sometimes a bit of fresh air is quite nice. But I will find out. It will depend on the weather. So I may well do another show in the evening as a recap. And I do like the recaps because it's good for me to do anyway. And we'll go from there. So from Trader 72, a grim day indeed. But let's hope for a better one tomorrow. Please subscribe and like. Any comments below, please. Would be much appreciated. And have a great evening all. And good luck to Adobe tonight. Wish me luck. Well, wish you luck as well if you hold it. Let's go, Adobe. Over and out.